Good morning, everybody. This is Patrick Montes de Oca with the live trading room for the Equity Management Academy. On this segment, I would like to take a look at the report, the last report that was published in Trader Planet, titled, "What is Fibonacci telling us about the gold?" This was published on December 16th, 2016. And on this article, basically, I was quoted that since the high of 1378, we have come down all the way almost to a 78.6% Fibonacci correction. And the majority of the time, when the market comes down to this level, it usually signifies a completion of a pattern. The closer you can buy into that 78.6% retracement, the lower the risk. He recommended placing stop at 1116, which is the price with the highest probability of making or marking a price reversal. If gold closes below 1116, then this leg and this pattern will be negated. The market would need to be watched at this point to determine which direction it is likely to move. So what I want to do is take a look at the gold market since the report was published and see what's transpired and where we potentially are going with this and how basically we are using this intelligence for our subscribers, for our self-directed accounts, for people that are interested in a methodology that is a proprietary methodology that we use basically in the application of these directional signals in the futures markets and how we apply this intelligence relative to other derivative assets. And we're going to take a look at one in particular right after this comments here on the gold market, which is called Nugt, N-U-G-T, Nugt. As far as the gold market is concerned, it appears that the Fibonacci retracement is validating that this low that was made on the 15th should hold, and for all intents and purposes, that's the level that should be used as a long-term stop. And as you can see here on the chart, the market is approaching the basically the previous levels of Fibonacci at 61.8%, which are about 1172, 1173. Now, since we have gotten a pretty clear signal as far as our criteria is concerned, the criteria that we use, we want to take a look at a very specific instrument called Nugt and basically what we can expect to happen in relation to the price of gold. If we take a look at the market back in December, at Nugt back in December, the low was 348. And as of July, August 11th, it got out to a high of 35.80. That was a phenomenal move. That anywhere from 1,000 to 15% could have been achieved. It was achieved in price, and what we're trying to identify right now is where we are in relation to this year, as December is the month where we expect the major bottom to take place and the completion of the annual low, as it did back in December of 2015. And what we're looking at is a incredible opportunity, which I believe is or could be a historic opportunity where if we take a look at this instrument, it's a very volatile instrument for all intents and purposes. Anybody that's interested in this type of instruments need to understand that these are triple X velocity instruments. These are very volatile instruments that essentially are written, are underwritten based on the underlying ETF, which is GDX. And this is a direction 3 times velocity ETF that can be traded very much like a futures contract. Liquidity is very, very good for you to be able even to day trade, which is what we are using for us to manage the risk away from the margin calls of a futures contract on a day trade or even on an overnight or a position trade. When we can accomplish, when the potential is identified here of 1,500% in a $300 move in gold, which occurred back in since December. If we take a look at the price of gold since December, we accomplished better than a $300 move from late December to sometime in August, July, August of this year. And we feel very strongly, based on the criteria that we use and the algorithms that we use, that the potential for a $600 move in the price of gold is very real. And therefore, Nugt is at this price of currently trading at $7.93, an incredible bargain. We could see this price trade in the 70s. As we take a look at the Fibonacci retracements since the high in July, August was made, if we take a look a little further back here, we're taking a look at the Fibonacci retracement since the all-time highs were made and where we are in relation to the lows that were made recently at 348. And what we're finding here is the long-term outlook of the market is projecting this price can rally up to about 94. 78.6% Fibonacci retracement is 92.59. This is the extreme, you might say, of the Fibonacci retracement that I believe will be accomplished. And so when you are looking at this opportunity, you want to take a look at it as an opportunity for the intermediate to long term, 3 to 6 months, where you can buy this roughly under $8 a share and potentially sell it for $100 a share. If you would like to find out more on how we coach and we educate people into the application of the VC price momentum indicator in your portfolio, please give us a call. You can reach us at basically the website anytime. You can give me a call at 805 area code 418-1744 for more detail, or you can sign up. Go into contact us on our website and just send me an email at support@ema2trade.com. give us a call, 805 area code 418-1744, or you can email us, support@ema2trade.com. Once again, this is Patrick Montes de Oca. I appreciate the opportunity to share this tremendous information with you. I hope you have a fantastic new year. I hope 2017 brings you peace, joy, happiness, and lots of prosperity. I'll talk to you soon. Be well. Good trading. Take care.